So I'm going to be looking to buy below this midnight opening price until price gets to the level I was anticipating it for as my draw on liquidity, okay, because I had a certain level in mind that I was anticipating for the week, okay. So once price gets to that level, that's it for the week, okay. So once you start learning this concept, that is how you want to start off, okay. Have a particular level in mind as a drawn liquidity. Once price gets to that level and you have taken 1 or 2 trades, you should be done for the week, okay. Don't try to overdo it as a beginner, okay. So now we have the midnight opening price, of course, right here, okay. So we have it here and we have that OB. So this is that range from the 1 hour time frame, and this is price. This happens on Sunday, okay. So we have that low to that high. So I'm looking at this OB as a drawn liquid, as a discount array to frame a buy setup around, okay. So inside of this 1 hour OB, we also have the 15 minute order block that is overlapped with it, okay. So this is 2 discount array at the same time, okay. So price opened and we are in the London key zone, okay. We traded down first, okay. So now the secret is this: whenever you are bullish, do not pay less attention to the move that run upwards, okay. The first move that goes up, the first price legs that or in other words, whenever you are bullish and price opens up in midnight, okay, or let's say in your Q zone, and suddenly price starts running to the upside, okay, pay less attention to that, okay. You are only interested in the price leg that goes below the 12 a.m. midnight, okay. So remember, whenever you are bullish, you want to buy at discount arrays below or close proximity or close to this opening price, right? So that's close proximity entries. So you want to be buying this at discounts below or close to this opening price, right? So now I already has a range, because you can see the London Q zone. When I pull up my chart, the range has already been formed within the Q zone, okay. So I had this low to that high. So let's apply our fib to it right now, okay. So you can see that 1 hour range, right, and we also have that 1 hour OB. So from this low to that high, price drops down below the midpoint, which is equilibrium, into discount. So now we are looking for 2 things. We are looking for a discount array below midpoints or close to it. Then we are looking for a run below buy side liquidity, or sorry, sell side liquidity. We are looking for a run into sell side liquidity, which is below an old low, okay. So notice the first low that went below this 12 a.m. midnight, okay. If you are quick on the lower time frame, you could have gotten a long entry there to that, but I'm not interested in this minor movement, right? I'm not interested in this minor movement because you can see we went below an old low here, okay. So you could have gotten a long entry and in for that, but I'm not interested in this kind of movements, right? So I'm more interested in price reaching for this OB as a discount array. Seeing it on the 15 minutes, you can also see that we have a 15 minutes OB overlapping with it, okay. So that's 2 discount arrays at the same time, okay, below midpoint and below at the same time below the 12 a.m. opening price. So you see the validity, you see the confluence that I have here, that I have behind this order block right now, okay. So at the same time, price has formed an old low, and it is yet to reach for that order block, okay. So price did the fat trade below that order block, as you can see right here, okay. So and prior to that, we have relatively equal lows here, okay. So what is residing below this relatively equal low is sell side liquidity, right? We have sell side liquidity residing below that relatively equal lows, and an order block with sitting right below it, okay. So you can see the number of confluence I have. So the more confluence you have behind your setup, the more valid it is, okay, the more confidence you should have in it, okay. So now what happened is that price dropped immediately into that order block, okay. So once price trades into this order block, that is where we start going to our lower time frame, okay. So for my lower time frame, I like looking at from the 3 minutes, 2 minutes, 1 minute time frame. Why is that? Okay, because before that, using the 5 minutes, is still a lot of time frame, and you won't be able to spot fair value gaps, and it will take a lot of time to play out, okay, before you get a setup. But using a 3 minutes, 2 minutes, and 1 minute time frame, you should be able to get a setup easily. Like, you should be able to identify your fair value gaps easily. Okay, so we have a run on buy side liquidity and a run on sell side liquidity, plus a move, okay, into that 1 hour OB that is overlapped with a 50 minutes OB. Okay, so let's go down. Before we go down to our lower time frame, I want to show us something quickly. Okay, so now, if once we are long here, where is our target? What do we target for? Okay, so if you are having troubles with regarding targets, okay, we have we have this old high here. Okay, you can use that as a target, or better still, this move that took out this buy side liquidity, bring out your fib. Okay, project this same range using the bodies of the candle from this low to that high. Okay, once you project that once you project this range upwards, okay, you can see this is standard deviation. Okay, that would be 2 standard deviation right there. Okay, so, and we have an old high. So now, one thing you should take note of is that anytime price trades above an old high, we should expect a liquidity sweep of about 40 pips at most. Okay, so so you should expect price to trade above it at least, at most. It should be 40 pips. Okay, it could be 10, 20, 30, but it could take up to 50 pips to move above that old high. So this is an old high, right? So let's go back to the time frame. I'm talking about this old high right here. So once price trades above this old high, we should expect it to keep trading up at least 10 pips. Okay, at most it should be 40 pips. Okay, so between 10 to 40 pips. So that is how far price should go whenever it trades above an old high. Okay, so now projecting this range into 2 standard deviation. Okay, so that would be 1 standard deviation, but still yet we haven't gotten to that high. Then looking at the 2 standard deviation. Okay, so now these two standard deviation projection that you can see here above this old high. And what do we say, if price will trade above an old high, what is the number of pips that we expect it to go? How far should price expand above an old high? A minimum of 40 pips, right? So looking at that, you can see we have above this old high, we have that will be 40 to 50, that will be 10 pips, right? 40 to 50, that will be 10 pips. 50, it should be around 30 pips, around this level. Okay, so now we have 10, that will be 10, 40 to 50, that will be 10 pips, 50 to 60, that will be 20 pips. Okay, that's 20 pips sweep above this old high. And we have this big figure here. Okay, if you are familiar with the whole numbers, 0 zeros level, 50 levels, 20 levels, the rest. Okay, we also have a big figure resting there. Okay, so this is one way you can project the highs of your daily trading range. Okay, what do I mean by your daily trading range or dealing range? That is the time window that you start hunting for your setup. That is between 12 a.m. to 2 a.m. 2 p.m. every day. Okay, so this is the time window we'll be working with going forward into this in this trading log series, right? So we have, so now that is how you project your TP. Okay, so you just look at that price leg that took out liquidity. Okay, project it up using your fib from the low, using the bodies of the candle from the low to the high. That will be 2 standard deviation above an old high. If it goes above an old high, you should expect price to at least trade up between 10 to 40 pips. Okay, so now looking at which level is closer to this 2 standard deviation level, that will be, if you project, in terms of pips, that will be 10, 20, 30 pips, right? And that is close to a big figure as well, which is a 0 level. Okay, so with all this is how you pick your, you can project your highs of the highs of the day. Okay, that's just one way you can do it. Okay, so let's come back home to going down to our lower time frame, right? So you can see price trades down into that older block 1 hour, right? trades down. This is a 3-minute time frame.